listening to the Daily Gold Podcast, covering precious metals, the junior mining sector, and global capital markets for intelligent investors. Now, here is your host, Jordan Roy-Byrne.
Hey, everybody. Welcome back to the Daily Gold Podcast. Thank you so much for joining me today. And with me today is returning guest Brent Johnson. He's a founder, CEO of Santiago Capital. And I wanted to have you back, Brent, because I think the last interview we did was maybe 4 or 5 years ago, and I haven't done that many interviews in the years since. I've only interviewed a few people here and there. But, I really like your perspective. Us gold bugs, we need to listen to people who have a different perspective and don't regurgitate, standard gold bug dogma. And in addition to that, I was thinking when I interviewed you, you were bullish on gold. You were bullish on the stock market. I think you were also bullish on the dollar. And, the dollar is, I think it's around the same level, but right now it's kind of closing in on a 2-year high. It's had a nice move. But in that time frame, the stock market performed really well and gold performed really well. And I don't know of anybody else in the last 4 or 5 years who, had basically was expecting those same things to happen. So, my long diatribe aside, it's great to have you back. And I know you also follow international affairs really closely. I mean, even before we got into this terrible conflict with Russia and Ukraine. And so I guess big picture, I mean, how do you see this conflict impacting things? I mean, what's your view on things right now?
Sure. So, well, first of all, thanks for having me back. I always enjoy talking to you as well. I continue to believe that the world is headed towards a sovereign debt crisis. And, I don't remember exactly what we spoke about 3 or 4 years ago, but my guess is that I mentioned something like that at that point. And I'm the first person to kind of hold up my hand and say, you know what, I was wrong. We haven't had the sovereign debt crisis yet. It hasn't developed. So from that perspective, I'd say that I've been incorrect. And so for anybody who wants to say I didn't call it right, I'd be happy to admit that. But what I did say, and what I've been saying for a number of years, is that my framework for how a sovereign debt crisis will eventually come about and how it will play out would mean that we would get into a situation where the dollar was rising, gold was rising alongside of it, and that equities were probably rising as well. And that's kind of what we've seen over the last 2 or 3 years. Now, there's been obviously fits and starts, and I think the other thing that I always try to say, and again, I can't remember exactly what I said in that interview, is I said I expect all of those 3 things to continue to rise: dollar, gold, and equities. But that based on the design of the monetary system, which we probably don't have time to get into too much detail there is always going to be the risk of sharp and painful deflationary waves that perhaps come out of nowhere, even though I think overall we're in an inflationary environment as fiat currencies around the world get debased, I think the dollar strength is going to lead to periods of deflationary terror, for lack of a better word, which I actually think won't last too long when it happens, but I think they will continue to happen. And we really saw that in March 2020. We had a 30 to 50% drawdown in the equity market and commodity markets over a, call it 4 to 6 week period, which, many thought that was the deflationary wave, which would end all deflationary waves, send us back into the Great Depression. But, lo and behold, the central bankers and the monetary authorities, got together and pushed things forward and, supplied the world with the liquidity that it needed. And, here we are, and we, equities are back at their highs. Commodities have broken out. Gold is at its high. But the biggest surprise to most people, and what I've kind of been pounding the table on, is you're going to see the dollar get stronger as well. And when I say get stronger, a lot of people will say, well, it's only stronger against its fiat peers. It's not stronger against commodities and gold and equities and real estate. And my comeback to that is, okay, fine. I don't disagree with you. That's what I've said will happen. But when I talk about a strong dollar, I mean versus its peers. And kind of the analogy that I've used is, if I said Michael Jordan was a really incredible athlete, you wouldn't come and say, yeah, but he couldn't beat Secretariat around a quarter-mile track at Churchill Downs. Of course, because he's not a horse. And I'm not saying that everybody should sit in dollars and wait for asset prices to fall. I don't think that at all. But versus its peers, despite all the problems that the dollar has, it has an incredible amount of advantages that the rest of the fiat currencies just don't have. And as a result, I think you're going to see the dollar rise versus other fiat currencies. And what I think that is going to cause, Jordan, I think that is going to eventually cause debt to matter. Now, for the last several years, you could say for the last few decades, debt hasn't mattered. It just gets bigger and bigger. I think it will eventually matter. And I think the fact that the dollar is getting stronger versus other fiat currencies is what's going to be the catalyst to cause this sovereign debt crisis. So this is a very long way of saying that my position from 2 or 3 years ago hasn't really changed. I continue to believe that the two most important things that people can own right now to protect them about what's to come is dollars and gold. And that sounds a little weird because I know the standard line for most people in the gold industry is get out of the dollar. It's going to zero. It's going to be hyperinflation. Despite the fact that I don't think that that's the case, and even close to being the case, I still think you should own gold because I think those two assets are really the most sturdy and financially sound things, which sounds weird for somebody to say, but I think those are the two most important things you're going to be able to own over the next couple of years.
Yeah, and if that's a great point, because if we're looking at gold against foreign currencies in recent years, I mean, even back to 2014, 2015, it has been so much stronger against those currencies. I know you're following gold against all those currencies.
Yes.
But it has been so much stronger than gold and dollars. And I think back to, I was at a gold conference in the early 2000s when the dollar decline was really driving everything. And at that particular year, I don't think gold was moving up that much, but the dollar was getting killed. And Paul Van Eden made a really good point. He said, no, this isn't a gold bull market yet. This is a dollar bear market. And it gets to what you're saying. I mean, I know you agree with me, but if gold's in a real bull market, it's outperforming everything. It's not a situation where the dollar is declining and that's, pushing up gold and all these commodities. I mean, commodities as well in the last year or so, they've been doing really well amid dollar strength. And even if we go back to, I want to say 2019, even 2020, 2021, gold performed really well during the periods when the dollar was not falling. And then when the dollar had its decline, gold was actually correcting most of the time. I mean, what do you make of that? Does that color any of your thoughts moving forward?
Well, yeah. I mean, I think, there was periods of times where the dollar actually was in a bear market and it wasn't going up. But versus other foreign currencies, and that's versus the dollar, but versus other foreign currencies, it perhaps was going up. And, I tend to look at the price of gold in several different currencies. And there's just no question. If you look at gold in foreign currencies, it's done much better than the dollar. And to be honest, that's one of the things my affinity for gold, for lack of a better word, is kind of what led me to the dollar strengthening theory. Because I never just looked at gold in fiat or dollar fiat currency terms. I always looked at it in terms of yen. I always looked at it in terms of euro. Because, the important thing to remember is if you're sitting in Argentina, of course you know what the dollar exchange rate is because it's a global reserve currency, but you're more concerned with what's happening to your Argentinian pesos. Same thing if you're living in Brazil or Australia or Austria or Russia. You're always going to look and see what it does in your home currency. And if there's and when I would used to look at where demand is going to come from, I would think about if I'm sitting in Germany, what's going to spur me to go buy gold? And I realized that, yeah, of course, going up in dollar terms is important, but what's even more important is my living expenses, which are in euros. So what was happening with the euro would likely be more likely to encourage me to go buy gold than what was happening with the dollar. And then that's when I kind of really started digging into currencies as they relate to each other. And that's when I kind of came to the conclusion and the belief, and again, I still hold this, is that the dollar is going to get much, much stronger versus other foreign currencies, despite all the problems it has, despite all the bailouts, despite the helicopter money, despite the profligate spending by the governments. And the reason is the whole world is in the same situation. The whole world has to, try to deal with these very, very low interest rates, that all this debt that they've borrowed at low rates. And, in order to counteract that, they're all going to have to, do yield curve control. They're all going to have to, probably do more QE. They're all going to have to institute some kind of capital controls. And so then it becomes not a question of who's doing the worst things, but on a relative basis, who's doing the least bad things. And I just really believe that is the dollar. And so this is very kind of a long way of answering your question, but the gold was in a bull market in foreign currencies before it was in a bull market in dollar terms. And while I do think that it's important to own gold here, the chart looks good. It has a lot of things going for it. Again, I'm more bullish gold in foreign currencies than I am in U.S. dollars. But even if we had some kind of another deflationary shock where gold went back to 1,700 in dollar terms or whatever it is, it doesn't really matter to me. I own gold for insurance. I don't own gold so that it's going to go up 4 times and I'm going to go buy a Lamborghini and I'm going to be rich and laughing at all my friends who didn't buy gold. That's not what I own it for. I own it as a hedge against kind of political idiocy and and kind of what governments are typically known for is debasing the currency. But I don't think everybody should only own gold. I think it's a crucial part of a portfolio, but I don't think it's what everybody should have 100% of their portfolio in.
So we're at a period where we can see the yield curve is inverted. We're coming. We could say we're coming out of a pandemic. The oil price has made a huge move. And now we got this war on top of it. It seems like we're probably going to have a recession here in the next year or so. I mean, in that scenario, how does that impact where you see these markets, gold, the dollar, stocks going? I mean, do you think could this be a point where the dollar is able to break above 100 and get to 110 or 120 during that kind of coming liquidation? What do you see?
So this is what I always say is I don't claim to be a fantastic timer of markets. What I do think I'm pretty good at is identifying setups. And so what I would say right now is we have the perfect setup for a surging dollar. Now, whether that actually comes to pass, I don't know. But the problem with a surging dollar is it creates so many problems in the rest of the world and in global markets that to me, it's not a risk that you can afford to ignore, even if all fiat currencies are being debased. In other words, I have a lot of people say, well, it doesn't matter if the dollar's going up versus foreign currencies because all fiat's being debased. Well, it actually does matter because, again, because the whole world, the whole monetary system is levered off of dollars, if the dollar goes up in price, that puts pressure on the overall system, and that's how you get these deflationary waves. And remember, when we had the deflationary wave in March of 2020, gold went down 20%, and the miners went down 40 or 50%. So even if those things and those things both recovered faster than everything else, and I think that would likely happen again. But my point is that if we do get in one of these sharp deflationary sell-off events, you can't just assume that gold and the gold miners are going to go screaming higher. I think you have to be ready for them to go lower in that environment. But to your point, the setup now, the whole world has been fighting really since, for sure since the global financial crisis, and you could argue for many years prior to that. The world when I say the world, I mean the global central banks and the monetary authorities have been fighting against raising rates or higher rates, right? They extend the way to extend the game is to extend and pretend, extend the loans. Instead of you never pay off the loans, you never pay the bill when it comes due, you just extend it. Well, as they borrowed and borrowed more, as interest rates went lower and lower, now they have the problem that if interest rates rise, it becomes very hard to service the debt. And I think a lot of people, especially in the gold community, have a very good understanding of this on a national level as it regards the United States. We've borrowed so much money. We have a huge budget deficit. We have a trade deficit. There's no way we can ever pay it off. Again, totally agree with everything that is said there. The issue is that every other country is literally in the same place. And so if all those other countries are dealing with the same issues and they have to take the same measures and perhaps take them to an even greater extent than the United States, that means that the dollar can still rise against us. And the reason that the key point Paul, and for all your listeners who have never heard this before or who have never understood this, is that the reason it's so important for rates to go up, or if rates go up and if the dollar goes up, is that much of the world has borrowed in dollars. So again, everybody knows that the U.S. owes close to $30 trillion. But what most people don't know is that the rest of the world owes more than $30 trillion in dollar terms. And so when the dollar goes up in value versus their home currency, not only do they have to pay that principal back, but now they have to pay it more back than they originally borrowed. It's kind of like you make payments, but the principal keeps still going up. The other thing is that because they borrowed in dollars, when the U.S. raises rates, they're actually not just raising rates on the United States. They're raising rates on the whole world. And so that puts additional pressure on entities outside the United States and countries other than the United States who have issued debt in dollars. And, I think the story of the year, I think you would agree, has been the rapid rise in rates. And, the 10-year yield is out like at 2.8% or something right now. And it was, at the lows, and 2 years ago, it was below 1%. So that's a huge, huge, huge move. So borrowing costs, the funding costs have tripled in that time frame. And so, or maybe even more than that, gone up 4 times. And so, that pressure, I think, is hitting other countries particularly bad, because not only is growth slowing, so their top line revenue is falling because growth is slowing, but then with the inflationary pressures that we know, energy costs are up, food prices are up, input costs in a lot of manufacturing are up. That means they're getting their revenue is falling, or at least not growing, but their input costs are going higher. So their profit margins are getting squeezed, which makes servicing all that debt even harder. And so I think that's where we're at. And I think what these other countries are going to have to do is they're going to have to resort to yield curve control and printing of their currency prior to the fact that the U.S. has to do it. Now, I think the U.S. will eventually have to do it too. But I think these other currencies and other countries are going to have to do it beforehand. And as they start to print and do yield curve control, while the U.S. is currently cutting QE and doing quantitative tightening or raising rates, you get into this possibility where the dollar starts going higher and it creates a vicious circle. And then throw onto the top of it all of the supply chain issues from COVID, and now all the supply chain issues that are coming up as a result of sanctions with what's going on in Russia and Ukraine. So you really have the perfect storm for dollar strength. Now, whether it materializes or not, I don't know for sure. But what I do know is that if it does materialize, the effects will be felt by everyone. And I think it's something that must be that possibility is something that must be hedged against. You need to be prepared for that to happen.
So when you say it's almost the, I'm not using your words exactly. I'm putting words in your mouth, but it's almost a perfect setup for the dollar to have this spike. What does that mean for gold? Do you look at gold, the driving forces, as almost the same, or is gold, potentially on the cusp of a huge breakout here? Is that signaling? Usually it's the opposite. Usually the dollar goes up first, and then gold has a huge move. Could this be a different situation where we see gold? They're both going up now, but gold could have a more explosive move just based on the setup in the chart. How do you see the interplay between the two and the fundamentals?
I still believe. I think a lot of it has to do with the speed with which the dollar rises. So if you look over the last 6 months, let's go back 2 years, and I'll try to make this quick. But in 2020, on February 28th, the dollar was at 94. And 3 weeks later, on March 20th, it was at 102 or 103. So it had a 10% move over a 3-week period. Actually, it was even shorter than that. On March 9th, it was like at 94. And 10 days later, it was at 103. So it had a huge spike. And that just caused devastation, because it's not just the level of the dollar, but the speed of change. Again, it's just a wrecking ball that comes out of nowhere. Now, and we all know what that did to asset prices, both gold, stocks, everything, commodities. But now look over the last 6 months. Over the last 6 months, the dollar's gone from 94 to 100, let's call it. But it's done it over 6 months, and it's just kind of been a slow, steady boil. It's kind of like the quintessential boiling of the frog. And you're starting to see problems, come up now, but they haven't totally. We haven't had a total collapse we haven't had a huge deflationary move. We've had some volatility. Some asset prices have come down. Some commodities have stopped going up at the same rate. I think if we get one of these spiking dollar scenarios, again, because if something unexpected happens, then I would expect in that scenario both gold and the miners and silver to sell off initially. Now, that doesn't mean that I'm a gold and a silver bear. It doesn't mean that I think you should go out and sell all your gold and silver. I just think you need to be prepared for that. That's why you don't have 100% of your money in gold and silver. You need to have some cash on the sidelines. So if anything, you can go buy rather than become a forced seller, with gold down $100 or $200 or whatever it is. Now, if we just continue the slow boil and where the dollar goes to, let's call it 110 over the next 6 to 12 months, I think in that environment, it's much less likely that we see a sell-off in gold. But again, I do not think that we are, going to see $2,500 gold or $300 gold in the next couple, or $3,000 gold in the next couple months. Now, I don't rule it out. This is not me saying that it can't happen. It can absolutely happen. Again, that's why you have to own it. But I wouldn't be surprised if gold just kind of trades in a band between, call it $2,000 and $1,800 or even $2,100 and $1,800 for the rest of the year. Until we get more, information or more, see how this all plays out with Russia, Ukraine, China. See, the other thing that I would say, and I know I'm kind of jumping around here, Jordan, but it's all related. All of this stuff is related, is that if you look at foreign currencies, for 40 years, the yen was in an uptrend. And it had a 40-year support line, which it would come down and bounce off of and go back higher. Well, over the last, call it month, it has actually broken that 40-year support. And now the Bank of Japan has come in and instituted yield curve control. So they're trying to save their bond market, and they're sacrificing the yen as a result. So what that does is that puts a lot of pressure on other regional Asian currencies who compete with Japan. Because now Japanese goods are cheaper than these other countries. Same with China. And the last couple times where the yen weakened significantly, it put pressure on the Chinese yuan. And China is already dealing with two things. One, they're dealing with One, they're dealing with COVID. They've got all of their country, or all of Shanghai's locked down again. So they're still dealing with the effects of that. They're sort of dealing with the effects of the sanctions on Russia because they're such a big partner of Russia, and their real estate market is in very much in disarray. So they're fighting deflationary pressures from the cost of their inputs rising, cost of energy rising, and their real estate market deflating. So now with the yen weakening and putting more upward pressure on the yuan, it puts pressure on China to devalue the yuan. So if China devalues the yuan, that means they're trying to pull inflation into China, and they're trying to send deflation out to the rest of the world. Well, that's the scenario that I've been talking about. Something like that could cause the dollar spike, which then leads to pressure on assets. And then it's those types of things which lead me to say, even though I think that gold's going to $5,000 over the next, 2, 3, 4, 5 years, it could very well sell off in the short term. And I think you just need to be prepared for both scenarios.
Yeah, very well said. I guess one more question, I'll let you go. Help me figure out what is true and what's not, because I see some headlines that say Russia's on a new gold standard, and then I see some headlines that say, Russia's defaulted on its debt. So I know this might require a really long answer, but
Sure.
what the heck is really going on? Because again, you look at these headlines and they're contradictory. So I don't know. That's why I need to, I need to ask someone like you who actually follows this stuff really closely.
Well, so here's what's going on. And the first thing I'm going to say, because a lot of times when I make these comments, I already know that some of the responses I'm going to get, so I'm going to address them right here. The responses I get will be, Brent, how can you not see this? This is Russia using the resources they have, gas and gold, to dethrone the hegemony of the West. And then they will say, can't you see that the rest of the world is de-dollarizing? The rest of the world is sick of the U.S. placing sanctions on the rest of the world. They're sick of the U.S. being the bully. They're tired of being beholden to the dollar that can be weaponized. How can you not see this? And the first thing I want to say is I can absolutely see it. You're absolutely right. The rest of the world really, really wants to get out from underneath the dollar. But just because they want to do it doesn't mean they're able to do it. And again, the analogy I would use is I have a plan to become the greatest golfer in the world. It doesn't mean it's going to happen, right? And just because I want it to happen doesn't mean it's going to happen. And the sanctions that have been put on Russia are the most severe sanctions any country has ever been subject to outside of wartime. And I know with what's going on in Ukraine, you could argue that it is wartime. But if we just consider that a skirmish and not like a major war, I mean, these are very severe sanctions. And I know kind of there's this popular meme that, oh, they don't really hurt Russia. Russia has all the tools to counteract it. You know, China and Russia are playing chess, and the United States is playing checkers. Well, I'm here to tell you that these sanctions are real. They do have big impacts. They're not minor. And with all the countries that signed on to do it, if that many countries signed on alongside China and Russia to boycott the dollar, everybody would be like, oh my God, this is the end of the dollar. The whole world is up in arms against the U.S. But this, when you do this other way against China, then all of the dollar bears say, well, it's not really that big of a group. They don't have China, so it's not that important. But my point is the U.S., despite all its problems, despite all the people who think it's losing its influence, it was still able to put together a global coalition to put incredibly harsh sanctions against Russia. Now, one of those things that is going to impact Russia is a huge gold producer, okay? Which means they produce gold. And for a long time, the central bank was buying most of it. But in the last couple of years, they weren't buying most of it anymore. And so those Russian gold miners would export that gold to the West. Well, with the sanctions going on, they can no longer export that gold to the West. But it's still a very important commodity for Russia. Russia does not want these gold mines to go bankrupt. They do not want these gold mines to shut down, because when you shut a mine down, you don't just turn it back on, right? And so what Russia has done is they've said, okay, the central bank, even though we weren't buying it all before, we will now come in and we will buy it from the banks who are basically buying it from the gold miners at $1,500 an ounce. So I know a lot of people said, oh, now Russia's on a gold standard. Well, no, they're not on a gold standard. What it is that the central bank of Russia is, for lack of a better word, bailing out the domestic Russian gold miners. You know, 2 years ago, when the U.S. gave funds to Boeing, it didn't mean that, you know, we were all of a sudden going on an airplane standard in the United States. we were providing help to a struggling industry, and that is what is going on in Russia. Now, does it also happen to benefit the Russia because now they're going to have more gold? Yeah, probably. Again, I'm a huge believer in gold. I think everybody should have it, but that's not what they're doing here. The other thing is that on a gold standard, for it really to be a gold standard, it means that it's convertible into gold. Well, right now, the ruble's not convertible into anything. The only group that can sell rubles right now is the Russian central bank. And so if somebody wants to buy natural gas or buy gold or buy something from Russia, now they have to do it in rubles. So, but because you can't just go buy it on the open market, you got to go buy it from the central bank. And so so the central bank will sell you rubles that you then use to buy some of their goods. And that has helped strengthen the ruble back to the same level it was prior to the war starting. But it's basically a currency peg at this point. It's a manipulated currency. It can't be sold. Like, these banks can't go out and sell their rubles and buy dollars. You know, it's basically the Russian central bank is basically making them buy rubles and hold them. And so, again, if you're going to say that gold is manipulated or the dollar is manipulated or all these other, markets are manipulated, that's fine. I'm not going to argue with you there. But you can't say that the price discovery in the ruble is evidence that China or Russia is playing checkers and the rest of the world, that Russia's playing chess and the rest of the world's playing checkers, because there is no price discovery in the ruble right now. So again, it doesn't mean that gold's not a super important asset. It doesn't mean that Putin doesn't want gold. It doesn't mean that, gold's not going a lot higher, but it does also not mean that the ruble is on a gold standard. Nobody that has rubles can go to the central bank and say, give me the gold. That is a gold standard, and that is definitively not taking place.
Okay, thank you so much.
Sorry.
Explanation.
Sorry for the long rant. I just think it's important to understand what's really going on.
No, I really appreciate it, because if you're on Twitter or you follow various sites, I mean, you just get one tiny thing can be spun into basically pick your own headline. And it's really important to really follow these things and gain an understanding of what it really means. And sometimes it requires a lengthy explanation, like the one you just gave. Go ahead.
Here's the funny thing. Let me just make one last point on gold, because I know this is a lot of your listeners are focused on gold, and it's what the majority of people come here, and for good reason. Your show's great, and you always put out great information. I think to a certain extent, people expect a little bit too much from gold. Now, I happen to think that gold is probably the greatest asset in the history of the world. It doesn't decay, it doesn't tarnish. It'll survive war, revolution, hyperinflation. It'll survive deflation. It basically just endures, right? It's a way to protect your capital over time. But one of the things I've always liked about gold is it's not complicated. You just buy it and you own it, and it just sits there. And what it does is it maintains wealth. And so sometimes when I hear all these very convoluted stories about all these crazy manipulative things that have to happen for gold to go higher, I always kind of think that that's kind of the antithesis of why I go to gold in the first place. Gold's very simple. It can't be destroyed. It can't be debased. And that's really all it is. So all these different things about gold standards and quasi-pegs, and you use this asset to reset the ruble, and then you change the gold to oil ratio, and it's needlessly complicated. If you believe in gold, just buy gold and hold on to it, and you'll be just fine.
Well, on that note, Brent, before I let you go, could you tell our listeners where they can go to follow your work?
Sure. I think anybody who's heard me talk before knows that I do a number of these different podcasts, which I always love doing. Again, I appreciate you having me on. If you go to either YouTube or Google and you just search either Brent Johnson or Santiago Capital, you'll get a number of different links that you can listen to. I'm pretty active on Twitter. The handle is you can just search Santiago Capital, or it's Santiago AU Fund is the handle. And then I have a website, just SantiagoCapital.com. The only thing that, for regulatory reasons, I can't have a bunch of stuff on the website, so it's really just a landing page with an address, but it has my address and contact information on there. So I always try to answer questions when people have them. I'm not always successful because sometimes it gets a little much, but I'm always happy to respond if people have questions.
Okay, well, thank you so much for coming on today, Brent. Really enjoyed it. I love your perspective. Another way to look at gold and the dollar. And, it's a crazy world. And so hopefully we can have you back in the next or the coming quarters to see what's new.
Sure. Anytime. I'm always happy to talk to you, Jordan. Thanks.
Thank you for tuning into the Daily Gold Podcast. For more interviews, editorials, and analysis, log on to TheDailyGold.com. And for premium coverage of precious metals and the best junior mining companies, visit TheDailyGold.com/premium.